this is a unique moment in Canadian history and in human history. And I thought, you know what, if I was going to reach out to somebody, I wanted to reach out to somebody who is a passionate Canadian, a nation builder, somebody who straddles from having been a founder and now a funder through Radical. And as well, in his past life, he was a lawyer in the entertainment space. He was a TV producer doing really cool stuff, bringing stories from the musical industry to life. And then started a company called Milk. And then he and Tomi Puutinen pivoted a little bit to Layer 6. And then Layer 6, which is a really powerful engine for artificial intelligence, and had big customers like the New York Times, which Jordan was featured in this morning, ultimately got acquired by TD Bank a few years ago, which was a phenomenal deal for TD, really gave them an enormous leg up over their competitors. And I'll let Jordan talk a little bit about that. But really, I thought the way that we would maybe start this off is to talk about, you know, Jordan as a founder, somebody who was building a company from the ground up with just an idea and a whole bunch of sketches on a wipeable wall, which I remember so vividly coming to visit. Can you kind of give us your perspective as a founder and what it would feel like going through this type of a crisis and unique time in history?
Sure. First of all, thank you for having me, both everyone at Next and everyone who's joined, and you, Joe. So, you know, being a founder is hard all the time. It's particularly hard when you're going through like one of the worst economic and health crises in human history. So, you know, I think founders are kind of built for these kinds of crises in a way. You know, it's in the DNA of a founder to be able to deal with the literally hourly ups and downs of running a business. But this adds a whole other level of complexity. And so I think these kinds of events are great because it gives people a forum to discuss and meet with each other and hear some other perspectives. In our case, we started in 2011, Milk, and the thesis of Milk was to use machine learning, in particular deep learning, to do content discovery of cultural content and personalization of it. So that was really the core underlying difference. The product, you didn't see that in the product. It should have just felt natural. But it's the same tech that YouTube and Netflix and Amazon and so many others use now. Our idea was we're going to start using this, and this was back in 2011, before ImageNet happened, which was the big breakthrough in AI. Jeff Hinton and two of his students won a big competition called ImageNet that Stanford ran. That caused the big flood of people from tech companies scooping up people at University of Toronto who were Jeff's grad students, Jeff Hinton's grad students, and then at all the other universities who are using this technology. So we were ahead of the curve. I remember when I first went and talked to people and explained what we were doing, they just looked at me like I was from space. I had an interest in it, but luckily I had a partner in Tomi who'd actually studied with Jeff in the 90s and used this tech when he was in the West Coast running search at Inktomi and then at Yahoo, and then left and built a company that he sold and became the ranking engine at Bing. So Tomi was very versed in it. What was interesting is when Tomi came back to Canada and we joined forces in 2011, he went back and reconnected with Jeff and found that what was going on here was ahead of what the West Coast big tech companies were doing. And then the world kind of, those companies caught up. The truth is, being a founder is really hard. So at the beginning, we bootstrapped. We put our own money in. We walked away. All of us were not kids. I was 39 when we started and walked away from a couple of different very successful businesses I'd built up. One, a law practice that supported people in media and tech entrepreneurs, and also some people in sports, just because I liked those three things. I also had a media company where I was producing a TV series, and we were managing artists and writers and producers and doing all kinds of different things. So I basically had to walk away from all that stuff and go from a nice income I'd built up to zero. And write a check into the business. And so did Tomi and our third partner, Dawn. And, you know, we hired people, we basically put all the money in. And that was tough to deal with kids and mortgage and all the rest of it. Joe, I don't know if you know, but when Joe came in as an angel investor, when Joe came in, I maybe never told you this at the time, but we were probably about 3 weeks away from being out of money. So
I'm really glad you didn't tell me that.
Yeah.
I got an upgrade.
I would have maybe found the money somewhere, but Joe catalyzed an angel round that was really important to us at the time and gave us a bunch of runway and allowed us to get the product out and start building partnerships and doing other things. And so, the truth is, being a founder, I think you really have to commit to your vision completely, but you have to be smart about it. And I think the principles of running a business are the same whether you're a startup or a giant company. At the end of the day, you need a product that customers want to pay for. And there's different ways that you can monetize, but somebody ultimately has to pay for you to keep running that business. In a crisis, cash is king. So having a balance sheet that is strong, meaning you've got money in the bank, whether it's from investors or ideally from a product that you're selling, is really important. And I think managing through this is, you've got a lot of things to deal with as a founder. You have to make sure that if you've got accounts receivable out there, you're going collecting as quickly as possible. If you have customers, you want to make sure they renew, and if you have new customers, hopefully they pay, you can get them to pay earlier. But a lot of that gets thrown upside down when you can't meet people in person, you can't pursue sales channels. So all of that stuff, I think, is really a unique and enormous challenge. The way that sales historically happen for tech companies is you have to get in front of people, and you just can't do that now. So I think there's going to be a shift towards companies accepting that a lot of the more sales will, especially larger enterprise sales, will become acceptable to do through things like Zoom. But it's going to take a change in attitude at the buyers. And so we have a whole kind of new way of doing things coming out of this, I think. The other things, though, you need to do are you need to manage your spend. So with all of our companies, we've sat down and gone into very aggressive budgeting exercises. And all of these are companies we've invested in the last 10 months because our fund only launched last May. But we sat down with all of them and went through scenario planning. So what if absolutely no new money comes in? So accounts receivable don't get paid. The sales funnel goes to zero in terms of coming to fruition. None of the money that's owed to us on renewals comes in. And then on the other side, how do we manage our costs? So that's kind of one scenario. The other version of that is this closure doesn't last that long, and we're able to reopen. For some of our businesses, actually, it's accelerated their business because the digital adoption actually just got accelerated because people, in one of the cases, people can't get into hospitals now. So the hospitals needed to deploy some technology that can give patients access to things digitally that they couldn't otherwise get access to. So there are some businesses that actually benefit from it. But for those that don't, it really is a challenging time. And it's on top of all these other factors, you then got to manage a team that suddenly is not in front of you we're in week 5. So how do you keep people motivated? How do you keep them working? How do you keep the morale up across the organization? All of these things are new challenges that no one has ever had to really deal with before in this way. So it is a very unique time. I think that any company coming out the other side of this, any founder who's, even if their business fails, I think it will make you a much better founder for the next time. My biggest fear is that the companies that do fail, it will be so scarring that those founders will lose their taste for entrepreneurialism and they won't want to do it again. And I would strongly encourage people to think about it as you're getting the best trial by fire that you'll ever have in your lifetime. This is not likely to happen again to this degree and in this way, because even if it does with a virus like this, we'll be more prepared for it. So this is a learning experience that I think that is just totally unique, and hopefully your business can survive it and flourish through it. If it can't, you shouldn't take that as a personal failure. I mean, most tech startups fail anyway. Certainly this doesn't make it any easier. So anyway, that was a long answer to your question about being an entrepreneur, but hopefully some advice from my early days and what we're seeing now.
Well, you know what? You're in a very exclusive club of people that have been out there in a period where you've been out fundraising for a startup, And now, after a successful exit and launching this new vehicle, now you're on the other side of the table. What did you learn from being a founder that you're applying now to Radical Ventures and how you're allocating funds and some of the questions that you're asking of founders?
I mean, I think the first, I think there are a bunch of qualities that really benefit founders that turns out are beneficial in anything else you do also. One is persistence. So, I don't know that I have many superpowers. One of them is I'm willing to bang my head against the wall forever. And, what that means when you're a founder is that you use that for fundraising, you use that for sales and other things. When you're starting a fund, it's similar. You need to go raise, in our case, $350 million US as a new fund. Like, that's an enormous amount of money. I think someone told us once, the second biggest new fund in history in the world. So it's a lot of money to raise for a new institutional organization. And, persistence is just incredibly important. You can't give up. I mean, you just get the door slammed in your face a lot, and you have to take it personally and just refine your game and get better. So that's one thing. Two, adaptability. We had in our startup a pretty hard, I don't want to call it a pivot, but we realized the AI tech we built inside the first business, Milk, was more valuable than the business it was in. And so we decided to split into two companies, pull the AI out and use it. We created the second company, Layer 6, where we would sell the software into enterprises that could use it, that had lots of data and were not great at turning it into value. So banks was actually our first vertical, which was very, very different from what we had been doing in Milk. The underlying tech was the same, but the way we were repurposing it required us to build a whole new software stack around it to be able to deploy into banks on-prem or in any cloud. It was just very different. And it took us about 1.5 years to build the software. So that kind of adaptability is, I think, critical in a time like this. Figure out what the thing is that you've built or that you have that actually matters to people. And maybe it's not your original vision, but if it allows you to stay alive and build a business out of it, focus on that. Go where the interest is for what you're doing. And I think when we look at companies now, we look for those traits. Are they adaptable? Do they learn fast? Are they persistent? The other part of it is obviously huge ambition. So one of the things I like most about what's happened in Toronto and in Canada in the last, since we started in 2011 is, I think there's been this huge momentum in the tech community, and it's largely because younger founders are ambitious, like globally ambitious. Growing up, and I'm, a kid of the 80s, it drove me nuts that I felt like there was a lack of ambition in Canada. And it turned out that a lot of my friends from school ended up being other tech entrepreneurs. We were introduced by Dan DeBow, who's had 3 successful exits now, and a bunch of other friends, David and Nick Stein and others who've been very successful in tech. I was friends with these guys from when I was a kid. And we kind of, I think, we saw the world the same way and were ambitious about it. I think the lack of ambition generally at that point drove me nuts. And I think that has shifted dramatically in Canada now. And that's what is a big part of the momentum in the ecosystem. So obviously having that level of ambition means you're willing to really kind of run through walls and keep going no matter what. Now, having said all that, I don't think people should be crazy. I mean, I don't think you should lose your home or not be able to feed your family in order to support a business which isn't getting traction. So you have to understand where the limits are, but you have to make a lot of sacrifices in this space. So those things, I think, combined ambition, determination, persistence, and adaptability are really critical factors that we look for in companies, and we felt we had. Specifically, in the kinds of companies we look for, we're investing typically in AI companies, like deeply technical companies. So really world-class technical chops is important in our case. We built an impact team that helps support those companies with recruitment. We brought in Aaron Brindle, who's the head of public affairs at Google, who helps our companies with their narrative, which many deep tech companies aren't typically great at. So we try to add some of the things where we think there are holes. But I think those kind of ambition, the vision of what you're doing, persistence, and adaptability are kind of key, you know, the intangibles, I would say. There are other things you need to have as a leader: charisma, that, you know, people are going to follow you. There's a lot, you know, you need to know how to read EQ so you can hire people and really connect with them. There's a bunch of things that are just not obvious beyond, you know, does the product work and is it priced right?
So again, you have been a visionary, a leader. You are a founder of the Vector Institute. You're launching this fund, biggest in the world. Can you kind of give all the folks on here an idea of your vision for Canada 5 to 10 years from now? Because you didn't go out and raise all this capital because you thought Canada was going to continue to be a backwater. You see something pretty special here.
Yeah. So for us, everything we've done is kind of fits into one overall narrative, which is that Canada has historically been a resource-funded nation. And those resources, frankly, are declining in importance in the world, oil and paper. And we have very expensive oil. We've seen it already, where, you know, Alberta's in fairly dire straits at the moment. We don't think that's a unique point in time. We think that's a trend that is going to accelerate. And one of the challenges we believe is that other oil countries like Saudi Arabia, where it's you know, the government knows they're going to be in power in 30 years, they've started to diversify into tech. And here, because it's multiple elections away when oil is over, no one's really focused on it. So our view is Canada has all the attributes to become a world-leading knowledge economy. We have excellent schools. We have an amazing immigration policy that brings in really talented people and grows the population. And in particular, the leading edge of tech in terms of value creation is AI, and the best people in the world are Canadian. So that, you know, when I was first talking about what we were doing in Milk in 2011, 2012, I would ask people, who are the most influential group of Canadians in the world? And the answers I would always get were like hockey players and like Drake. And, you know, I agree, they're fantastic. And I actually call this new ambition in Canada the Drake effect, which I can describe separately. But what we believed was the people who were coming out of Jeff Hinton's lab and Joshua Bengio's lab in Montreal and Rich Sutton's lab in Edmonton, those people were going to be more transformative to the world than any group of Canadians ever before. And we knew them all. And many of them had left. And so for us, the vision of first Vector, well, I mean, first our own company, but then Vector, and then the fund was, how do you support transformation of the country to being a world-leading knowledge economy? And we think we can leverage AI to be that place that we jump forward. And then if you do that effectively, you can really influence the world and punch it way above your weight as a country of 36 million people. So the Vector story was, I had this idea that we needed to have a place that was a talent magnet for the very best talent. So they would stay here. They wouldn't leave as they had been. Jeff Hinton's grad students are the heads of AI at Apple, Facebook, Uber, OpenAI, a lot of the leadership at Tesla, DeepMind, Google Brain. They all came from this little lab in Toronto, but they'd all left. And when we asked them why, the answer was there just weren't enough opportunities. I could maybe get a job at U of T as a professor, but you know, that was every couple of years. So the vision for Vector was, you build this place that is a research institute that enables the academics to be both in faculty, work with students, and work in a company, a big company, a small company, but they are not forced to choose, which almost every academic institution to that point had forced the choice. And so many of them had gone into companies because the companies were offering so much money. And that exacerbates the problem of you have even fewer students that are graduating because there's fewer professors to teach them. So that was number one. And number two was, we wanted the sponsorship of Vector to be any Canadian company. So the banks came in and insurance companies, Air Canada is a sponsor, Ellis Don, Linamar, also the tech companies Shopify, Thomson Reuters. You could only sponsor if you're a foreign company if you put an AI research group on the ground in Toronto. So not just engineers or marketing or sales, you have to have AI researchers on the ground. And the reason, and we got criticized for this quite a bit, but the idea was simply this. If I'm layer 6 and I'm going to recruit a superstar from DeepMind to Toronto, and this applies anywhere in Canada, same story. But that person's making $1 million a year, and they're going to take a big pay cut. They've got a nice house in Wimbledon and kids in private school and a spouse with a job. There's no way they're quitting and moving to a different country if the only job they see out there is the one they're moving to. They have to know that if the job doesn't work out, there's 20 or 50 other jobs, and they're going to stay and be able to be supported. And a few years ago, that didn't exist. So the idea of Vector was to be this research center, a large grad school, a center of economic activity in the space that would draw in all these others. And what we've seen now is there are about 40 to 50 big company AI labs, Canadian and non-Canadian, that have coalesced around it. There's 600 AI startups in Toronto, which is the most of any city in the world. And so all of that was happening, and as it was happening, we were growing layer 6 and realized the piece that was still missing was local capital that could be additive. There were some good funds, particularly some funds from Montreal that were here. There are some excellent seed funds, Golden Ventures and others that are here, and version 1 from Vancouver. But there's still per capita just way less capital locally than there is in so many other growing ecosystems. So that was really the thing that made us decide. We were in the middle of a big fundraise in the fall of 2017 for layer 6, which was growing very fast in revenue and customers. And we had our third top 5 tech company come and try and buy us. And they made 5 offers, and we kept sending them away. On the 6th offer, I turned to Tommy, who sat beside me at a desk for 9 years. And I said, Tommy, if we don't at least consider why we're saying no, and we go another 6-7 years and we fail, and then we have to explain to our wives why we're moving into the forest in a tent, and we have to say we just turned it down because we didn't have a reason, that won't go over very well. So let's at least have a reason why we're turning down the acquisition offer. And that really led us to, even though we were on quite a fast path to being a unicorn, there was an even bigger opportunity to be a significant VC and support many, many more companies in the ecosystem, allow them to grow here and become giant companies here, and support them through not just the work we do directly with the companies we invest in, but community events and other things that we can deploy into the ecosystem. So that was a bit of the thinking about it. So where we see the country, where I honestly believe this country can be in 10, but certainly 30 years, is one of 3 key pillars of the leading edge tech ecosystems in the world. So Silicon Valley will definitely be one. China will be the other one. We can be the AI and quantum led third ecosystem in Canada. And that, I don't mean just Toronto, Waterloo. I also mean Montreal. I mean kind of across the country. We're too small a country to be competing with each other. And I think we have to think about this from a country perspective. But the quality of people here, the quality of the education system, and the fact that we have an open immigration policy that encourages people to come, while I would say the first 2 choices in the Western world have closed their borders quite a bit, US and UK, we've now become the first choice. And we should, I think, ride that and double down on it. I would massively expand it, the numbers of people that we bring in, and take advantage of this moment in time. So that was a long explanation of our thinking, hopefully made sense.
So I would say, I just want to back that up and say that over the next 10 years, China plans to spend $300+ billion on artificial intelligence. Saudi, 120 billion at last count. Russia at 100 billion, because they know their future is very uncertain, with energy being the primary revenue driver. And so with us, and I really believe in your mission, because we are graduating some of the most talented people on earth. From HEC in Montreal, which we partnered with a few years ago with Next AI Montreal, because we really believe that can be a center of excellence in our country. In Alberta, Rich Sutton and the team and the people he's graduating out of the University of Alberta in Edmonton. It's a hotbed of super bright people, and so many people don't know that Google DeepMind has one office outside a head office in the world, and it's in Edmonton. I mean, it's so impressive. So I love the mission, love what you're doing. I also wanted to expand and say, in a time of crisis like this, and every single crisis in human history has also been a time of massive innovation. What have you seen that is so cool and so innovative? Like one thing that comes to mind is Dyson coming out within 10 days of the crisis hitting the United Kingdom, and he builds a new respirator that he can build 10,000 of in, I think it was like 30 days. That impressed the hell out of me. What do you see?
A lot of really amazing stuff. So first of all, I've gotten pulled in to help coordinate an artificial intelligence response. So part of it just accelerates work that we were doing anyway to access more health data and give it to AI researchers to do things with, to be able to predict disease on a personalized level. With COVID-19, what's happened is the governments have realized we have this enormous wealth of talent and we happen to have a unique single payer, at least at the provincial level, so theoretically single source of data, which means you can hand that information to researchers and do a bunch of different things with it. So there are applications now, it was actually announced on Sunday, at the provincial level, they've created this thing called the Panther program, which is to collect a lot of the healthcare data, anonymize it, and give it to researchers, which include a bunch of people at Vector, and to do a number of different things. Predict disease outbreak, predict clustering of new cases. So if we want to get the economy back open, how do we do that? Predict the kinds of things that will be healthcare solutions, like medical solutions for this. So which drugs should we try that are developed for other purposes that could be applied here? The first genetic sequencing of the COVID virus was actually done using technology that was invented at Vector. Then there's a whole other piece of it, which is predicting what the best way to open the economy back up is. So what is the most high value job that you put back out into the workforce with the lowest risk to the health system and to that person? And so understanding that allows you to then have a comprehensive plan to open up. So we've been involved in doing both of those things. The amount of work that is being done by those researchers, particularly the ones that I'm dealing with at Vector, but it's researchers across the country, is incredible. So that's one piece of it. On the company side, we're seeing companies do all kinds of different things. So we made an investment in a company that does diagnostic monitoring of patients without being invasive. So it's essentially a device that can sit in a hospital room or at home and monitor people's respiration and other things. The acceleration of the adoption of that into China in particular actually has been amazing. There's a company that we invested in 2 weeks ago that hasn't been, both that one and the one I'm talking about now haven't been announced yet. But the one that we invested in 2 weeks ago, it essentially allows patients to access their digital imagery and share it among from one to another inside a hospital, from one doctor to another, without needing anything physical, which in this environment is critical because you can't get into a hospital, you can't physically do things the way that you could before. So we've seen just a real, this is going to be a moment, I think, that massively accelerates adoption of digital solutions in the healthcare system in particular, but I think really across everything in supply chain. There's a company that another one that we've invested in that's not announced yet, or rather we're about to invest in, so it's not announced yet, that uses AI in robotics. So what's interesting is people are always afraid that robots are going to put people out of work. But there's a big problem right now where migrant labor can't get to farms to farm crops. So crops are literally being pulled off the trees and plowed back under because they can't get them picked and shipped to distribution warehouses. And then from there, they can't get them out because there's not enough labor in the warehouses. So I think you're going to see a very aggressive adoption of robotics to support the food chain, because you have to keep the food chain up no matter what, the food supply chain. And there's a real problem with that now. Even if you could get the migrants in, you can't have the same density because you need to separate them by at least 6 feet. So I think you're going to see robotics be increasingly deployed in a bunch of settings in critical infrastructure like food supply chain and healthcare. And so a lot of companies kind of pivoting toward that. In terms of the bigger companies in Canada, there's a huge number of companies, all the car company, like all the car parts manufacturers, Linamar and others, who are doing things like starting to build ventilators, who switched to creating PPE from a lot of the materials that they otherwise had. So there's been a real shift. I think at the other end of this, one of the other things that we'll see is a lot more domestic manufacturing capability of critical infrastructure, things that are needed in kind of critical infrastructure and supply chain. We're not going to be able to have a situation coming out of this where if this happens with another virus in 5 years, we don't have enough masks for doctors. It's just going to be unacceptable. So, when we get to a vaccine, we don't have enough manufacturing capacity in Canada. And so I think over the next 12, 18 months, we'll see that start to shift as well. There's going to have to be some significant investment to build the capacity so that we don't have to get into a queue to get a vaccine that's manufactured in Switzerland or in China or somewhere, or in India or somewhere else. So I think those are a number of the things that we're seeing already. This really is a moment that I think, we're all kind of concentrating in the weeds and just keeping things afloat and managing our families and making sure our kids are fed. But there's going to be some significant structural changes that come out of this that I think we'll look back in 20 years and say that was the moment it all changed. So I would encourage entrepreneurs, when you have some time, when you're in the shower or wherever else you've got a couple moments, think about the way that the world will look and whether or not this is an opportunity to move there more quickly. I really do think it is in a lot of cases.
So one of the things I've been really impressed with.
Yeah, I'm really sorry. We're getting some really great questions, and I was hoping we could kind of lob a couple of those your way. If that's okay.
I'm reading them right now. So one of the things I was about to say is I've seen a lot of companies that are going out to try and drive revenue despite the environment, and that's either making masks or offering significant discounts for when this is over to come into the restaurants, or discounts if you do takeout versus Uber Eats because of the huge margin hit that some of the delivery services has. One of them is one of our founders, Edgar Brown, who's adapted his business model to allow for the technology to be used virtually. And so Edgar's question is, as someone who's been on both sides of capital raising and deployment, how would you go about raising an angel pre-seed round in this economic environment?
So there's no question that it's more challenging than before because everyone is looking at their capital and it's less than it was 6 weeks ago or 2 months ago. What I said to people about a month ago when this first hit and you saw the stock market fall off a cliff is even the wealthiest family offices suddenly feel a lot less wealthy when they look and see the market down 30, 35%. So I encourage people, if they could, to wait a month. And we're now about that point. The markets have steadied a fair amount. I'm not sure that they're going to stay there. I think the economic indicators are way worse than the markets are pricing in right now. So I think you have to try and time it when, if you see the stock market is solid or up for 2 or 3 days in a row, make your phone calls, send your emails. People are feeling slightly better. I mean, it's such a choppy time that it really is down to that, I think. For the institutional investors, most of the ones that have newer funds are less affected because as long as their LPs continue to fund them, they're early in their cycles and they can, like in our case, we're continuing to invest. We're going to end up having done 6 deals in the first 4 months of this year. So we're continuing to deploy capital and our LPs are, I just had an LPAC meeting this morning. They're encouraging us to do that. They're not taking the foot off the gas at all. The valuations are no question down. And I think that is because the funds that are further along in their fund life and they're looking at their next fund are suddenly realizing I might have a lot more trouble raising my next fund. So I don't want to deploy this one quite as quickly as I was, which means they're putting less money into companies, which means that there's less competition for deals and it means the pricing falls. So we've seen already pricing down pretty dramatically. So what I would say is if you need money right now, obviously you got to go raise it. If you don't, it's best, I think, to continue to build your business and the metrics that that increase the value of the business, and find a moment when, in the next couple of months, when things steady out. If you can afford to wait, I would suggest waiting 6 months. I think by September, we'll have gotten through the first wave of this. And even if we have a bad second wave, we'll know what to expect much better. I think the death toll will be lower. We'll have understood how to manage things. People will be used to it. One of the biggest problems when people don't understand what to do is they just stop doing anything. And that's kind of the moment we've been in for the last month that I think we're starting to come out of a little bit. What's interesting is even with the death toll rising in the US, the markets have been up. Today's maybe an exception, but I think it's because people are starting to get a handle on, okay, we understand what this means. We understand where this is going, and we understand how to manage things a little bit better. Obviously, the US government putting massive stimulus in, the Canadian government doing that helps. But so that's basically what I would say. If you absolutely need to raise money, you should go do it. You should start with people you know, because you're not going to be able to get in front of people you don't in person, and people tend to want to write a check to someone they know. If you have someone who is committed to you, who has influence, ask them to make introductions to their network, because people, angels in particular, will follow other angels they trust and have invested with before. So the best way to raise right now is to find an anchor that people trust, ask them to get introductions to their network, and then build around that way, because you're not going to be able to get in front of them if you haven't met them before. You're going to have to do it by Zoom or Google Hangouts, etc. So hopefully that is a helpful suggestion. It's not going to be easy, though. I mean, it really is not going to be an easy moment to raise. If you've got a great business, you'll raise money. You will. But the valuation will be less than you would have gotten 4 or 5 months ago. And I think it'll take longer.
So Aileen Agata has a question about building relationships with VCs, despite not being in this fundraising stage. So what are you doing to curry favor and build those relationships for the medium to long term?
We're open for business, as is every other VC that we know. So our entire operation is operating from home, but we've spent years as investors doing meetings over Zoom. I mean, I feel like I should have shares in Zoom because we started using them when they first started. Obviously, every other platform we use as well. So I would say that VCs in particular are as adaptable in this environment as any business is. They're open for business, taking meetings, meeting companies, and ultimately will continue to do deals. So that shouldn't be a problem. If you have access, you should pursue it. No one's not going to take a meeting with you. What they might say to you, if they're honest, is we may not make investments for the next month or two as we see how things shake out. But no one's not taking meetings, and the meetings are continuing. So
a question from Azar Azad. It's hard for companies to maintain the AI talent that they have on their team when bigger, better funded companies are poaching them. Do you have any suggestions?
Yeah, I mean, the way that we always approached it was, I think every founder has to contend with the competition of better funded companies out there. You have to create a story that is unique. And it's, why are you doing something that is going to conquer the world? Then people start, if you believe that story and you can start to show momentum there, people will join you at a discount and stick around because of the equity upside. I strongly encourage every founder to give equity to every person on the team. We did this. It didn't matter who you were. We do it in our fund. So it's unusual for funds to do this, but it doesn't matter who you are. You get a piece of the upside. I think that incents people to A, feel like they're an owner, and B, stick around longer. So, there's no magic bullet solution to this. You just have to create a vision for the company that people buy into, and you have to reinforce that. And obviously, you need to have some success. People won't stick around forever. But if they buy into the vision, my experience is they will come for a lot less money in terms of the cash comp, and they'll stick around. They'll be very loyal. And the loyalty is actually a real benefit to starting companies in Canada. In the Valley, people jump much faster. Yeah. As they vest, they jump. And here, people don't do that. So it's actually one of the secret successes, I think, for Canadian companies is the loyalty of people who join.
Another question from Jennifer Arnold. This is an interesting one because this is, where do you think business practices like offshoring will land post-COVID?
It's a very good question. So I do believe that you're going to see some critical infrastructure manufacturing come back. So everyone I've spoken to in government acknowledges that we cannot rely on a foreign supply chain in a situation like this. So Dominic Barton, who is the ambassador to China for Canada, was our senior advisor. He previously ran McKinsey for 9 years globally. And then he was our senior advisor, and then he was appointed as ambassador to China. I started speaking to Dominic. I've always spoken to him a fair amount since he got appointed, but I started speaking to him quite a lot, but beginning mid-January about COVID, which at that point was still called coronavirus. And so we had a kind of very early view into this. And one of the things that he started to talk about quite early is Canada is going to need to get in line to buy a lot of the medical supplies, like PPE for frontline medical practitioners and also ventilators. They've set up, there was actually, I think, an article in the Globe or the Star the other day about this, but they have turned their entire diplomatic corps in China into a procurement operation where literally they are inside companies buying and securing massive quantities of PPE and other supplies. They have to then make sure that those supplies get to the plane, and then the plane takes off and gets to Canada without another company overbidding and undercutting the deal, or in some cases, other countries seizing the shipments as they're being transported back. So there was a story of the U.S. Germany bought an enormous shipment of supply from China. The plane, I think, it went from China and landed in Thailand, and the U.S. seized the plane and took all the supplies. Germany made a very bold statement about how this was like a wartime aggression for an ally. It was unprecedented, etc. That stuff, I think, is such a concern now at a governmental level that we're going to see the reemergence of domestic manufacturing for things like key pharmaceuticals, PPE, medical supplies. I think it's inevitable, and it will be, even if it requires a fair amount of government support to get off the ground, you're going to see it happen. The governments have just acknowledged we can't be in this situation, and we have this problem of in hospitals. There are hospitals in Ontario where they're doing intubations where they have to ration the number of N95 masks in the room during an intubation because they don't have enough. So I think that problem has now been fixed, but it was quite severe a couple of weeks ago. The government has basically just acknowledged that cannot happen again. So I think that's going to be a tremendous shift. We might see other things like food supply chain becoming much more domestic, with vertical farming and other ways of doing things domestically. So we're not reliant on shipments coming from other places. It'll be interesting to see how much of a decoupling there is in the North American economy because it's so integrated. But if there was the incident a couple of weeks ago when the Trump administration banned 3M from shipping masks to Canada, I think without realizing that the sole source of raw supply was from a pulp and paper mill on Vancouver Island. So that I think they reversed course and they didn't mention it. But if 3M can't ship to us, then the obvious retaliatory action is not to let the pulp and paper go to 3M from Canada in the first place. So there's going to have to be a whole rethinking of the supply chain model that I think we'll see. So it's hard to imagine, but I think that there's going to be a really significant shift, kind of a deglobalization, so to speak, over the next 3, 4, 5 years. And a lot more expectation if we have to do this ourselves. And part of that is a trend that started with the American administration just not being as interested in global alliances as every administration since the end of World War II. I mean, they basically built a world economy that they benefited from by building global alliances, and they've deconstructed that, and this has accelerated it.
Yeah, I refuse to mention the name of the President of the United States on a call like this. So let's go to Morgan Rosenberg's question. You make the distinction between needed sacrifice and losing your home. especially in these times of uncertainty, there's a large gray area with a lot of short-term debt available and payment flexibility. How do you go about determining that line as a founder?
I mean, it's really hard. So the number one priority for you as a founder has to be your family. And I've experienced it where a lot of times, and certainly in my time and my energy, the company came first. But when it comes to a crisis of whether or not you can put food on the table at home, or keep the roof over your family's head, or keep the company alive, like that's a choice that has to fall. You have to do the right thing for your family first. So if keeping the company alive is getting to the point where you can't do that, I think the choice is being made for you. Having said that, I took out a larger mortgage. I know even very successful founders that have hard trouble raising money and gone and like remortgaged homes that they had paid off. That stuff happens. I think that's much riskier to do in an environment like this where the world is so uncertain. So I would not necessarily encourage you to personally lever up your debt. I don't think that's a good idea. I think you should be deleveraging if you can. What I really mean by it is in an environment like this where it's so unknown, you have to look at the alternatives and look forward and say, what is the point? You can't just kind of go day by day. You have to look as far forward as possible and kind of make decisions. For example, if this company is unable to raise money by X date, I know that I need to go get another job by Y date in order to keep putting food on the table. You have to know that in advance before you get to X date, right? You have to be looking forward as much as possible. And it's hard to do when you're in the middle of it. You're spending so much energy keeping things afloat when they're in rough times. You're in a boat and literally swirling around. Like moving it forward, let alone like keeping it afloat, is very, very challenging. The first thing you need to be able to do is keep it afloat, and then you can worry about moving it forward. So if you can't keep yourself afloat, you have to look at alternatives. So that's not a very specific answer. Specifically, you need to sit down and do a budgeting exercise personally. Like, what do we need here in order to eat? What do we need to pay our mortgage or for our car payment and our insurance, and like the very basics. And then you can decide, can we forego some of the things that we used to have before that we can't do now? Like, we were going to go do a nice vacation each year with the kids. We can't do that. Are my kids in private school? Do we need to put them in public school? Those are those kind of gray area examples. We had our kids in public school the whole time I was doing startup, because my wife works, thankfully, and carried us. But I basically sacrificed my income like mid-career in order to keep going. So some of those things are the things that are more gray and you have to make decisions about. The things that you shouldn't be making decisions about are food and shelter and, making sure your family's taken care of.
So as a multi-time founder, as you said at the outset, you know what, launching a company, starting a company, running a company, it's hard. There are a lot of painful periods of your life. There's a lot of stress and a lot of anxiety. And when you're in a time like this, I mean, this really is just so gut-wrenchingly difficult, but this is the time that you're meant to lead. I've done a lot of talking. I think what I'd like to do is Jenn Patterson was so kind to coax me on good question asking. I'm going to let her ask a couple of questions from our alums.
Sure. Actually, Joe, we're almost out of time. So I think it's okay. And I apologize, there's a garbage truck outside. So I think it's probably okay if you wanted to wrap up with any of the other questions that you didn't get a chance to get to earlier.
Okay. Yeah, sure.
Can I just say one thing?
Yeah, please.
So, for founders, when you're in a situation like this, I mean, I think anytime you're running a business, you can get so consumed by the business that you stop taking care of yourself. So let's assume that the food and shelter are there. There are a couple of other things that I think are really important to keeping the business running effectively. One is get sleep, particularly in an environment like this where there's a risk of getting sick. Every study I've read says that sleep is actually very important to maintain your immune system, which helps you fight off if you do get infected by this thing. It's also just good for your brain, right? You can be a better and more efficient leader. You can do better work in less time if you sleep properly. Second, exercise. People's routines are totally upside down being at home. You may not have access to the gym that was, your salvation. Try and do whatever you can at home. And if you're in places where you can go for walks safely, do it. And I'm guilty of not being great at this lately. We've been working so hard that I have not been keeping up my exercise routine. It's a mistake. You as the leader need to keep yourself healthy, both body and mind, in order to feel good, to be able to be a morale booster to the rest of the team, and to work more efficiently, which is, I think, important in this environment. So just a couple of things that I've learned from not doing properly that great founders always told, and investors like Joe always told me, and I didn't always listen. And it's a learning experience, but I really strongly encourage people to make sure you schedule it. And in a work from home environment, your whole day can get blitzed out by calls very easily. You should literally put in your calendar, block an hour to go do exercise or for a walk. Block times for meals, and shut off in the evening. Don't go watch the news before you go to bed. It's not helpful, right? So you have to create some structure when there's no structure in order to maintain your own health and then the success of the business. Sorry.
I could not agree more. I mean, in a time of crisis, that is the time that you're meant to lead. Everything is on your shoulders. So getting the sleep right, getting the exercise right. I would add to that, taking some downtime, not just a pocket during the day, but take the occasional Friday or Monday and just, shut everything down on top of a weekend. Because I found when I was a founder, I was constantly working on Saturdays and Sundays, but take a whole day and just say, I'm going to block that off. And that is going to be my commitment to myself and my family. The other one is I would use guided meditation for, if no other reason, and it just gets you very calm and very centered. And it's something that you can do because there is so much on your shoulders, and your teams need you to lead, your shareholders need you to lead, your board of advisors, your customers. So it's so important that you be at the top of your game. And it's really critical that you're able to bring your level to the highest that it can possibly be, even more so than when you're growing like crazy. This is a time where great leadership really, really matters, and great leadership requires you to be, basically very strong on all those levels. I think because we only do have 2 or 3 more minutes, maybe I just throw it back to Jordan and say, what is the one thing that you want to leave this group with as we close this out? And again, I just want to say it's with immense gratitude that I'm grateful that you're here. I'm grateful that you're sharing your thoughts and ideas. Maybe close it off with something else that you really want founders to be aware of as they manage through this horrible time in history.
Sure. So I think the one other thing that we didn't talk about is perspective. And when you're in a startup, even in the best of times, it's all consuming, and you really can feel like it's very tied to your self-perception, your health, and the way that you feel about your success or failure as a human. And while I experience all of those things and still do, it's really important to understand perspective. It's not life or death, right? You should never be tying your well-being so tightly to the fate of the company that you feel that way about it. And so what I've found particularly in this situation where there's so many companies that are having so much trouble now, if you feel depressed, there are other people to reach out to. There's a community of other founders. It's very hard to go talk about it with your employees because you don't want to demotivate them. And it's hard to go talk about it with your investors or board because you don't want them to get fearful. But there's a whole community of founders, and this is an excellent forum for it, to reach out and have discussions with other people and just share the experience that you're going through, because they're going through the same thing. And one of the challenges we have as founders is we tend to do this in isolation. I had the enormous benefit of having 2 co-founders in Milk, and then when we split the company in 2, Tommy sitting beside me. That made such a difference that I always worry that individual founders don't have that benefit. So make it part of your experience to reach out to others, either the people you know or through organizations like Next that can connect you. It's a really important thing to do to keep your perspective about that. It's not just your situation, right? You're not unique here in going through a tough time. Everyone is going through it. It makes it much easier to deal with because it takes the stress, the personal experience of stress off you. It's not all on you. So many others are going through the same thing. And there's, I think, a benefit to sharing some best practices. But I think that would be the one thing I would leave people with in this moment is it's not all on you. And if it doesn't work, it's not your fault. You did your best. It's fine. There will be the next thing. There really will be. One of the things about being an entrepreneur is you get a lot of failure. The failure to success ratio is not 1-to-1, but it's all valuable. And in the moment it feels terrible, but it is character building. It gives you experience that once you get past that moment, you can give yourself that perspective back. And I think it goes to what Joe just said. Give yourself a Monday or a Friday off in addition to a weekend. That allows you to just go away from email and Slack and text and everything else and video calls to regain a little bit of perspective. I think that is just, it's so important. And when we got caught up in these moments of wanting to do everything and be the leader and hero for the company, we don't do that as much as we need to. So.
Yeah, and so guys, again, really great that you could be here with us. Call on us. I know you're helping each other. I know our alumni are supporting each other. Call on your mentors. Call if you have an advisory group, bring them into the circle so that they can help you through this. I mean, that's what we're all here for, is that this is a time of people helping people. This is a time of Canadians helping Canadians, and truly it's a time of nation building. And when we come through this crisis, and as Jordan says, this will end, keep it in perspective. Your goal is to come through this healthy, strong, and your company positioned for success. And everybody that has been through a crisis, whether it's your first, fourth, or 14th crisis, knows that a crisis is a time of opportunity. As much as it's a time of gut-wrenching stress and anxiety, it's also an incredible time of opportunity. And those who are the most resilient, those who are the most focused on the horizon line, on the future, are the ones that are going to make this happen. And that's all of you, because you've been through Next, you've been through our programs, and you've been, had available to you some incredible resources. And those we're going to keep making available to you as we work through this period, but because we want you ready for success. So again, Jordan, thank you so much. Everybody, thank you for being on the call, and we'll keep doing these to keep you informed and keep you supported in this tricky time. Thanks, everyone.
Thank you.